Hola mi gente, welcome back to the channel. My name is Sean. This is We Are Investing, a channel that's dedicated in investing and personal finance. On today's video, I'm going to go over a list of 12 stocks that I think will outperform during a recession. In my personal opinion, it is very likely that we will see a recession in 2023 or 2024. Odds are this recession will be coming in 2023. At least that is what I think is going to happen. There have been a lot of topics about an upcoming recession because there are signals that are saying that a recession is near, or at least coming in the near-term future. Whether it's 12 months out or 24 months out or 8 months, I do not know, but it seems very likely that we are going to see a recession in the near-term future. Signals from the bond market, like the inversion of the 2-year, 10-year spread, is a great indicator that a recession is coming. Every recession that we have had in the past, there was an inversion with the 2-year and 10-year spread prior to the recession. The amount of time for the recession to actually start from that inversion varies. It could be as quick as 6 months. It could take as long as 2 years. But nevertheless, this is a huge signal. And in my personal opinion, from following the markets and the economic data that we are seeing and the position that the Federal Reserve is in right now, there is a very high probability of an upcoming recession. So let's go over 12 stocks that could outperform in a recession. Now, this is my personal opinion. I'm not telling you to buy any of these stocks, and this is not financial advice. But if there's one thing you take away from this video is what I'm looking at, what kind of sectors, and what characteristics I'm looking for in a stock that make it good during a recession. So hit that subscribe button, ring that bell, and smash that like button. Sit back and relax, and we're going to go over 12 stocks that I think can outperform during a recession. Now, I'm doing this on Webull. If you sign up with the link down below and deposit $100, you can get 10 free stocks. This is through a referral link that I'm providing down below in the video description. Webull starts trading at 4 a.m., closes trading at 8 p.m., and has $0 in commissions for options trading and for stock trading. Now, the first stock we're going to talk about, this is an ETF. The ticker is VIG, and it's the Vanguard Dividend Appreciation ETF. The reason why I think the VIG would be a good position to have during a recession is because of that dividend appreciation and the stocks that are in this ETF. These are stocks that have strong history of continuous dividend growth. And during a time of recession, investors are going to be looking for yield, and a dividend stock is a great way to do it. You're going to see investors looking for stocks that pay dividend because it's also a safe way to invest during a recession. That's going to increase the share price of these stocks. So if you're in before the recession, you should see a boost in the share price, and you're also going to be able to collect that dividend. The key takeaway here is dividend stocks will outperform or will likely outperform in a recession. Not all stocks are created equal, and this ETF makes it an easy way to get diversification, but with a specialty in mind, and that is dividend appreciation. Vanguard is also a terrific fund. Fees are extremely low, so when looking at ETFs, if you find one that is from Vanguard, they are usually really good. Now, if you take a look at this chart for the VIG, and this is the weekly chart, you can see that it is pretty much a consistent uptrend minus that huge pullback that we saw during the pandemic. The stock is currently trading at $162.70. If you open up the stats for it, you can see that it has a 1.75% dividend, which isn't a lot, but considering the steady growth upwards and that dividend you get, this, in my opinion, is a safe but good play for someone who's not looking to buy an individual stock and is looking to put their cash in somewhere where they're not going to get burned. The second stock on the list is Merck. Its ticker symbol MRK. This is a stock that is in healthcare, and I think that healthcare will be a strong sector during a recession because it doesn't matter the status of the economy. Health is extremely important, and you're not going to see a major pullback in spending for that sector, meaning that these stocks typically outperform during a recession, and they also typically have a dividend. Now, there are other companies you can choose from. Valuation does matter because during the time of the pandemic, you saw some companies like Pfizer and Moderna really catch a bid and have a very high valuation. And if the vaccine starts to sell a little bit less, there's going to be a drop in valuation for those companies. But Merck, in my personal opinion, is trading at a fair valuation and could be a good stock for a recession. Now, if you take a look at the chart for Merck, you can see that it's been consolidating for quite some time. It really hasn't made a massive move to the upside. It's been in consolidation since March of 2019 to now, trading in a range. If we take a look at some of the stats, the stock is currently trading at $83.52. It has a 3.3% dividend yield, and the price to earnings ratio forward looking for Merck is 11.48. Considering all of this, pullbacks in stocks like Merck might be a great opportunity to get into a position or add to a position, collect that dividend, and also wait for the stock to catch a bid if we see an upcoming recession. The next stock on the list is Verizon, ticker symbol VZ. This is another good stock because I don't think spending is going to be reduced during a recession. People are still going to need their telephones and their internet. So this could be a good play during the potential upcoming recession. If we take a look at the chart, the stock is below all of its major moving averages. This is another dividend yielding stock. It has a dividend of 4.91%, so close to 5%. And the valuation is attractive. If you take a look at the price to earnings ratio for the trailing 12 months and forward looking, you're looking at a valuation. You're looking at a PE that is under 10. This is a very attractive multiple with a high dividend in a situation where it's trading below its moving averages, so you're not catching it during a rally. You're not buying at the top and selling at the bottom. You're getting closer to the bottom. So definitely add this stock to your watch list and pick a good price before getting into it. That's my personal opinion at least. The next stock on the list is Google. We all know how big of a company Google really is. And that's what makes it attractive during a recession. They're not going to fail. They have a fortress of a balance sheet and they are going to stay around for a very, very long time. If we take a look at the current valuation for Google, it's trading at a price to earnings ratio of 24 for the trailing 12 months and forward looking, which might seem like a lot, but it's not a huge amount considering the historic price to earnings ratio for Google. If we take a look at the stock, it's going to have a split, but right now it's trading at $2,800 a share. This could be extremely different by the time you're watching it because Google did announce a stock split. The stock, however, is trading above its 200-day moving average. So depending on when you're watching this video, but if you watch it close to the date that it's uploaded, I would suggest waiting for the stock to pull back a little bit, get to that 200-day moving average, and then is when I would consider opening up a position in Google. But this company has so much pricing power. It's a huge corporation. It's in something that people are still going to be doing during a recession. Everybody still needs the internet. Everybody's watching stuff on YouTube. Everybody's cutting the cord and going to YouTube TV or other forms of streaming services. There is a lot to like about a company like Google during a potential recession. The same can be said for this company. This is the next company, the next stock we're going to talk about, and this is Amazon, another huge corporation that is also going to be doing a stock split and is also currently trading at the 200-day moving average. The same situation applies to a company like Amazon. If we take a look at the valuation, the price to earnings ratio for the trailing 12 months is 50.55. It's somewhat of a high valuation, but this is a company that is well deserving of it. And if we take a look at the weekly chart, you can see that it has been trading sideways for quite some time. The stock really hasn't moved since July of 2020. It's been consolidating and consolidating. The stock split could be a catalyst that moves the share price higher, but also I believe that Amazon is a great company, one of the biggest companies in the world, and will still perform during a recession. The next stock on the list is Molson Coors Beverage, ticker symbol TAP, TAP. The stock price is $52.42 at the time of filming this video. On the daily chart, it's above moving averages, so you can wait for it to pull back a little bit. But the stock, the company is going to do just fine during a recession. People are still going to be drinking. People will drink no matter what the status of the economy is, maybe even more during a recession. That's a good question. Do you think people drink more during a recession or during an economic boom? Let me know down below in the comment section. The stock is currently trading at a price to earnings ratio forward looking of 13.23. It does have a dividend. The current dividend yield is 2.9%. If we take a look at the weekly chart, you can see that the stock has been in the downtrend, but it looks like there are some signs of a potential reversal in TAP, and this could be fueled by more people piling into this kind of stock during times of economic uncertainty and a potential recession. The next stock on the list is Target, ticker symbol TGT. Target has a huge following, has a lot of people that shop there religiously, and it's a place where you buy your essential goods, your groceries, and your clothing. A company like Target or Walmart, I think, are going to do just fine during a recession. Spending is going to be cut back. But essentials are essentials. Necessities are necessities. And a lot of people get those goods at a place like Walmart or Target. And if we take a look at the valuation, forward looking, it has a price to earnings multiple of 14.44. It has a dividend yield of 1.71. And taking a look at the charts, it is in a downtrend. It is below its 200-day moving average. So be mindful of that. But if you take a look at the valuation, it's not overvalued, and this is a stellar company that I think will continue to do really good business during a recession. Now, speaking of a business that's going to continue to thrive no matter what the economy is like, this is a company that will always have a business and will always provide a service that is needed. The ticker is WM. The company is Waste Management. Trash is always going to be trash. You're always going to need somebody to take care of your trash. The stock is currently trading at $159.81. This is a company, a stock that also offers a dividend. It has a dividend yield of 1.63%. The price to earnings multiple looking forward looking is 29.67. The valuation is not cheap. There are a lot of people, as you can see by the current chart. If we go to the daily, you can see that the stock has bounced hard. It's above its moving averages. So this is something you're going to want to add to your watch list. You're going to want to do your due diligence and identify your entry point. But a company like Waste Management, they're not going to suffer during a recession. Now, another stock to watch. This stock has caught a bid. It is moving higher as we speak. This stock deals with energy, clean energy. It's a utility company. Utilities tend to outperform during recessions. The stock ticker is NEP. You can also take a look at NEE. This is Next Era Energy Partners LP. The stock is trading at $83.93. It has a dividend, a nice dividend of 3.37%. It has a PE forward looking of 44.98. If you take a look at the charts, you can see that it has caught a bounce. And if we zoom out and we take a look at the weekly, you can see that it's on a massive uptrend. That uptrend can continue. There are two tailwinds for this stock. One, utilities and energies are extremely important. The second catalyst or tailwind for this stock is that they deal a lot with clean energy in the state of Florida. They have a ton of solar energy, and this is a company that I think can continue to thrive moving forward long term. You combine those tailwinds with also a dividend and the type of business that this is in, it could thrive during a recession, in my personal opinion. Now, the next three stocks in this list deal with engineering and construction. During times of recession, the government typically spends money in infrastructure. And we pass a huge infrastructure package which will put money into these companies. It's going to help the businesses of these companies. The first company on the list is AECOM. The ticker is ACM. This is an engineering firm. If we take a look at the weekly chart, it has seen a massive move to the upside, huge upward movement. If we take a look at the daily chart, we're pretty much at all-time highs. We're well above the moving averages, so wait for a pullback. If we take a look at the share price, it's $77.60. If we take a look at the price to earnings ratio forward looking, is 22.55. This company has a very small dividend of 0.77%. These are companies that are profitable. Their margins are not great, but they are consistent and they are reliable. And with that infrastructure package, actually business is going to be better in the future. They're going to see more revenue coming in, and that's going to help boost the share price. The next stock on the list is Autodesk, ticker symbol ADSK. This is a tech company that has taken a massive hit just like all other tech companies. So valuation has come way down. However, they are also heavily tied into engineering and construction because what this company provides are softwares that are used in engineering and construction, such as AutoCAD and all of the other products that Autodesk offers. This company currently trades at a share price of $213. It has a price to earnings forward looking of 31.51. It does not have a dividend, but the company is growing at a nice rate. And if we take a look at some of the stats, the stock has a 52-week high of $344, currently trading at $213. It has a well-defined trend on the weekly chart and a support here at around $200. So right now, or maybe at the bottom of that trend line, would be a good entry price to get into Autodesk. This is one of the tech companies that I think can continue to thrive during a recession because of its ties to engineering and construction with AutoCAD. The next company on the list, this company went public in 2020. The ticker is BSY, and this is Bentley Systems Incorporated. There is no dividend. The valuation is a little bit stretched. It's at 54.13. It has a $12.56 billion market cap. And if we take a look at the stock price, you can see that it had a high of around $74 and has dropped a ton. This is very similar to Autodesk. Bentley provides software for engineers and construction. For engineering and construction, they have MicroStation and many other products that they provide so engineers can do their job. So this is another company just like Autodesk. It's a tech company, but it can benefit from a recession because of that infrastructure package and the money that is going to go into those sectors. So there you have it. We went over 12 stocks. We didn't go into extreme detail. I just wanted to give you the list and you're going to do the due diligence yourself. But there is a common theme here in the stocks that I am picking. One, they either have a dividend. Two, they have a business that is going to stay strong during a recession. Three, they are a huge corporation that is going to remain strong and has a balance sheet to withstand a recession and a pullback. Or they're in businesses that could actually see a boost during a recession. You have to combine all of those factors and other factors that are important to you, and you have to evaluate your portfolio to see if you need another stock that is like this, or if your money is better suited diversifying into something else. Also, I want to be extremely clear here. Just because there are many signals that we're going to have a recession, and I think that it's very likely that we will. I'm not saying that a recession is going to happen in the next week, in the next month, or even in the next year. And we could still see a lot of returns in the market overall. And we could still see tech stocks outperform and really rebound. So maybe right now might not be the best time to go all in recession stocks. right now might not be the best time to pull out all of your money. But it is time to do the due diligence, to do the research, and start planning it out, and maybe start adding, nibbling to positions that you think will do well during a recession to try to protect your portfolio somewhat and to try to diversify so that if a recession does come and we see a major pullback in the stock market, you are not completely wiped out. Obviously, if you are a more sophisticated trader, which hopefully you end up being in a year or two from now, there are other things you can do, like hedging your portfolio with put options on some of your long-term trades, using options to create passive income and create your own yield. So some of these stocks have a very low dividend yield, but a company like Autodesk, which has no dividend yield, you could actually sell options against your position and create your own yield. So there are many ways to protect yourself during a recession. There are many things you can do prior to a recession as well. And we go over a lot of these things on this channel. So if that interests you, then definitely hit that subscribe button, ring that bell, and smash that like button. Also, feel free to comment down below on some video suggestions. What are some video topics that I can do to make you a better investor or trader? Let me know what you're struggling with, what you need help with, or what you want to learn more about, and I'll consider making a video. So comment down below. If you want to support this channel even more, it does have a Patreon. It gives you access to a private Discord server where I'm there every single day. You can ask me whatever questions you might have. There are 500 other investors. I post whenever I buy or sell any stock or option in a dedicated channel so you can follow what I'm doing, and other members also post the trades that they are making. And it's a community where we learn together, grow together, and make money together. A link to the Patreon is provided down below in the video description. Outside of that, I thank you so much for your time. It's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya.